Let's talk about what's happening over in the secondary market. Suddenly, we're hearing yields have been inching up. What's your take on what's going on currently? After yesterday's bond auction, yields up. What's going on today?
Okay, today's market was today's market was very interesting. After the release of the auction result from yesterday, where we saw the 5-year coming out at 1368 and the June 19 coming out at 13.74, and the January 22 is coming out at 13.5. The natural thing that happened in the market today was the market started trading at the closing, at the auction levels in the market of today. At the initial stage, we saw a lot of profit takers from the auction. What had happened, some had gone to the auction, and because market was already trading below the auction levels, especially in the 22s, we saw some profit takers at the beginning of the market, and then what then happened was that yield started inching up slightly. But towards the close of the day, we also saw the guys that missed out at the auction coming into the market. So we saw a lot of offshore buyers coming in towards midday and the close of business to start buying, and that happened to make the yield to also, go down a little. So what happened was a case of the 2017 bond showing about 23 basis point appreciation, the June 19 showing also about 20 basis point appreciation, and the June 22 showing a 16 basis point appreciation in the market. So the market was principally that of a buyer's market today.
Well, Sam, I'm curious about what sentiment is like right now in the fixed income market. Are we still seeing that excitement that came over the past month with, of course, JP Morgan adding us over to their government bond index? What is sentiment like, Sam?
Interestingly, the market has been that of a mixed reaction. At the announcement of the JP Morgan, Nigeria inclusion in the JP Morgan index, we saw a lot of excitement from the offshore players. There were a lot of buyers in the market. But in the last 2 weeks, we've seen a lot of slowdown from the offshore side. This, in my opinion, was talking to some of the offshore guys. They wanted to see the local market guys rally the bond upwards a bit before they can come in. And again, the whole risk aversion, the whole risk off in the South Africa also contributed to most of these players staying out of the market and watching the African market before they could come in again. But again, at the auction, we've seen some new guys coming in, some of the guys that stayed away also coming in, because again, we must also look at the liquidity of the secondary market. Most of them want to play in the primary market where they can get decent sizes, large chunks of this bond, as opposed to playing in the secondary market. But the testimony of what happened today in today's market is that some of them have started coming back, and honestly, I don't think that excitement has disappeared. The waiting is going to be surely increased in November, so you're still going to see people. Nigeria is a country to be overweight right now. The whole fundamentals are very right for Nigeria: increasing reserve, increasing oil prices, reducing inflation, and among those in the index, those in the JP Morgan index, I think Nigeria is still the one that is showing good yield, and you see that will still be a lot of attraction for most of these players.
So I'm sure you're expecting quite a good showing at the T-bill auction that's coming up next week. We know the government will be auctioning out 111 billion naira in T-bills. Your expectations seem to be quite positive then going into that T-bill auction.
Well, the expectation is still positive. Yields are still low, so there's still much liquidity in the market. So even the local players, you'll see some of them going into the market. But the 1-year part of the curve still remains an attractive curve for the offshore guys. It still offers the highest yield in terms of the yield curve. Well, as at close of business today, you're seeing that yield showing at 14.7, and so what that means is that you still see a lot of attraction into that part of the curve. And for those that want to do duration, we'll probably be going into the 22s.
Well, very quickly, Sam, let's check in on what's happening with our currency. Suddenly it looks quite stable. It closed the day at 157.25. What's your take on the outlook, for Naira? Suddenly, like you said, the fundamentals seem quite strong right now.
Well, like you said, the market opened at 57.40.50 and closed at 25.35. The appreciation that was witnessed in the market today is largely on the back of offshore players who were coming in to pay for their auction winnings. And so there were more supply of liquidity into the market today. In terms of my outlook, I think between now and December, we're still going to see a stable foreign exchange. Most of the importers have already gone into the market to buy these bonds. So at this level, I don't expect the demands to be significantly higher than what it is at the moment. So if you ask me, I think we're going to see more stability between now and December and more bias towards appreciation.
Well, I mean, what's your take on the inflation numbers, Sam? I mean, we had inflation numbers come out. It eased slightly to 11.3% from 11.7%. What is your take on what we're going to see in Q4 and how this is going to impact our markets going forward?
If you look at the inflation trajectory, we're expecting to see single digits sometimes before the end of this year. Most of the analysts had predicted that the inflation was going to print out at 10.9, but we saw it coming out at 11.3. The good news from there is that it's still following the trend of a decline in the number. So if you ask me, I think it's coming out in line with expectation, and before the end of Q4, we're probably going to see single digits.